Hi, it's David here with Futures Trading. I hope you enjoyed your holiday. I know this is the holiday weekend as well, so some of you may be doing something moving forward. But again, please be safe and definitely enjoy yourselves. I want to say to you, thank you so much for coming by the channel. Fate brought you here. I did not pay for any likes, views, or subscribers. All of the thumbnails that you're seeing is of a chart that I actually went over. We've been touching on this choppy market condition stuff. Okay, we've been kind of getting into that, and I'm gonna just show you a little bit of what that looked like just today, and then we'll read a little bit of the real time, of course, because pretty much all of the videos here are in real time, pretty much all of them. And I want to tell you that because if you're going to read price action, the keyword is action. There needs to be something progressively taking place. Go look at the definition. It'll definitely describe to you that there's some level of progression. And a lot of times, when you find videos on YouTube, people do hindsight price action reading, which that again just kind of goes against the whole concept itself. And so I try to make sure that all the videos pretty much are in real time, even if we just read it for a little while. All right. So if you're new to the channel, I have a must watch list here. So you're more than welcome to take in all of this information. There's a lot of information here for you if you're new. You definitely want to go ahead and take in some of this information. Now, if you've never read a chart before in your life, I would absolutely suggest that you start here. Please start here because we take plain charts and just kind of go over it. And again, I've covered quite a bit of plain charts, but here recently I've released the indicator suite, and so I'm just trying to give you guys just a little bit of a inside look as to what the tools are doing. All right, we're going to take a little bit of a look at that as well. But here's the universal threshold. So this is how far the bar will pull back before it resumes. I want to let you know where your stop should be at and how you should be able to be safe until it continues on its way. The trend. So you just need to be able to count the bars. You don't need any prior structure breaks in order to know that the market is in a trend. If you don't believe me, go back and take a look at this video. They had a trend set in here, right in that bottom there in this video here. And this is what they've been doing ever since. And there was no prior structure break. So I try to tell you what, again, can show up on your chart no matter what market, what time frame, and there's not a whole bunch of criteria. You don't need a lot of different rules. Trading is really simple. It really is. Universal price action method. So a bar and a bar and a half, we got to find the majority in the chart. It's really important that we do that because the minority is compelled to follow the majority. This is the universal chart scale. So from left to right, I'm going to teach you how to look at that hard right edge and know that the market should turn while you're looking at the hard right edge. So you don't have to look hindsight in order to know where rotation can take place. I've been covering the indicators. I've been covering them and just trying to give you guys an inside look. Again, just at some additional information. That's all it is. The tools. You can get a lot of stuff with the tools. I'm doing this for a reason. I hope you guys know this. There's a lot of vendors online that's selling you guys indicators for $400, $500, thousands of dollars for that matter. And there's no kind of education behind it. Won't tell you how to read a chart, but just want to sell you the tools. I didn't come into this space to sell you anything. I'm sure a lot of you know that. I was here for a very long time before I even introduced these tools to you guys because I'm trying to lay a foundation of information that you can actually just use, and that's it. You don't need indicators to trade. You really don't. I've proved it to you on several occasions there, but everything that you would need is right here on the channel. So you don't really need a lot of information on your chart. But if you want a professional's opinion on your chart, me looking over your shoulders telling you that that's a potential good trade, take it. You can absolutely get that kind of experience for 200 bucks. And again, I'm trying to give you loads of information because that's all it is. It's indications. That's what they give you, indications of what it is that I think about markets. And so if you're regarding any of the information here on the channel, I can honestly assure you that how I code, I don't become someone different. I'm the same guy. Okay. So when I code indicators, the education that I have that I'm giving to you for free here on the channel, it's represented inside of the indicators. Okay, there's some additional information that I know that I'm just not teaching you guys here on the channel that you could via learn just having the tools on your chart. Okay, so I want you to just kind of consider that there's some additional information that I'm aware of about markets that I'm not teaching you for free. Okay, I can't do that. Okay, I can't tell you everything that I know for free. I can't. But having indicators, you could get just a glance into what could be potentially happening with the activity. Okay, just want to let you know that it's another way of learning, so you don't have to put thousands and thousands of dollars into education. You can possibly just, do something small. Okay, use a little bit of deduction and a little bit of time, and learn some of what is already available to you right in front of you. All right, so again, just some more information there if you want it. If you want it, you don't need it. I told you everything that you would need is here on the channel. However, Dimitri, my friend, you left me a comment here, and again, we're going to talk about this. You're using the 1 minute trend direction and a 15-second chart. So I want you guys here on the channel. He's doing the 15-second chart and a 1 minute trend direction. Really important here, the 1 minute trend direction. Want you guys to know that, because I pretty much put 1 minute charts in front of you. I have covered 15-second charts before, but it's been a little while. But the 1 minute trend direction, so he's getting his higher time frame direction, and then he's using a 15-second chart. I hope you don't mind me doing this. I know he kind of publicly put it down here, so I know he probably wouldn't mind. And so I want to help you guys see what it is that Dimitri is doing. And he liked the well, he loved it. He loved the climax price flip. So there's a update that I had did to the indicator suite for all of those that had purchased it. And yes, there was the climax price flip. That was an addition that I had put in there. Again, just more information that I know about trading. All right, and just trying to put it on your chart so you can get what it is that you would want to use. And of course, he said sometimes the price flip may not be there, but the aggression. Okay, he got the aggression on the chart as well. So there's two indicators here that I'm again highlight in the video. I'm gonna do this particularly for you, Dimitri, so you can see your stuff that you're using on video. So that way, when you come to the channel, you're not just watching the other tools. You can actually see your information that you're using on your charts here as well. So we're going to take a look at the climax price flip. We're going to look at the aggression, and of course that 15-second and that 1 minute chart. Okay, so we're going to just go ahead and dive into a little bit of this information. Bear with me, bear with me. I got some other indicators up here, and I'll talk about them a bit, but I want to of course cover the universal information. I want to cover that too, because some of you are new and you're not using any indicators as of yet, or you may be using some provided by the platform of choice. So whatever platform you're using, I want to give you some information that helps you with that platform. So whatever platform you're on, want to give you something that can help with that. Okay, so you don't have to have my tools. You can just have what it is that you have and do fairly well. All right, so let's kind of dive into some of what you're seeing. We got down here. Now, let me say this. This is only caveat I'm going to throw on this one. The map that you're seeing here, okay, that is the map expansion indicator. However, and y'all have it. You guys have it. I gave you guys the suite. You have the map expansion. You have the, let's just go in there and take a look. What it is I built for myself, just just to cut back my signals just a bit. I built and again, these are all indicators you can have. I built me a confluence one, which all I did was I tied the increased volume and the large trade size into the map expansion indicator. And then with this one here, I took and tied in the increased volume into the large size. So you guys already have the map expansion, you have the large size, and you have the increased volume. You already have this. And again, what I did was I took the increased volume and the large size and I threw it inside of the map expansion. And that's why you see this confluence. And the reason why I'm telling you that, because the map here that you're seeing, you may not see the same map signal on your chart per se, only because I'm throwing in the large size and the increased volume inside of that signal. That's it. Now, it could very much be there. That map signal could be there, but I want to let you know there may be occasional places where you may see the map signal here on this chart, and it's based on the fact that I layered in the increased volume and the large size into that indicator. Now, here on that large size confluence one, all I did was take that increased volume and I threw it inside of here. So that's the only caveat to the chart. I want to say that to you. But you guys have those indicators. So all you would have to do if you want to see the confluence, just put all three of them up there. That's all. I just got two of them. I just wanted to kind of remove one of them out of the loop because I don't want the frequency of the signal. That's all. I didn't want as many. So that's all I did. But you have the signals. Trust me, you have them, and that's how you would get the same effect. So if you're seeing the LS here, the large size one, and the map, all you have to do is just layer in the increased volume one, and you'll get the same effect. Same effect. All right. So, but the PF, this is the thing that the thing that's in blue is what Dimitri was talking about, and that's the climax price flip. All right. So that's the climax price flip. Let me stay in draw mode here. All right, so this is what Dimitri is referring to, you guys. This is what he's referring to, the blue, the thing that's in blue. That's what he is talking about. The climax price flip. All right, so that's what he's looking at. Now, if we go back, let's go back to do bear with me. Do bear with me. Let's go back to all right, these zones, I'm gonna just tell you these zones is based on that confluence that I put there. And again, that's that increase, and the other one, the large size. All right, that's the map indicators. All right, so if you go in the map, if you go in the indicator list and look at the map, okay, you start at the map, and that's this zone up here. Okay, the zone above and beneath the bar, that's the map that tells you where the bar is probably not gonna close. I want to say that to you. Probably not going to close. I'll tell you where the bar is probably not going to close. That's another additional perk to having the indicator sweep. Not only would I tell you how far the bar will pull back, this indicator will tell you there's a good chance that that bar will not close outside of that zone. So it's really important. So in the map list, again, you guys already have this information. All you got to do is gel it together. And that's what made me put that zone there. And that's all it is. And so we had actually the map, and we had all three of the signals. Let's just say that we had all three of the signals come in here on this bar here, and all of it just takes those two bars right here to make that signal. They leaned down into it, kissed it, and they took off. All right, and so we had two of the signals show up here, and again, that's that increase as well as that large size one. You have that signal here, and they kind of leaned down there before they generated this one here, and they've been up. All right. And that's just that symbol. But again, the price flip, that's the thing Dimitri is using. And again, this is a 15-second chart. And then, of course, this is your 1 minute. So he gathered his, let's say, his trend from here. All right, let's go back to 9:30. Let's kind of do this. Let's go back here. And we're going to touch on before they took off. Let's touch on that really quickly because that's kind of inside of that other video. Okay, that's kind of inside of the other video. They took off here. I'm not going to dive so much into it because they stopped it here. Okay, so they stopped the market here. Let's get this low. Let's just make sure we had the low here at 11.25. We had the low here, 11.25. So they kind of kissed it. So they made the turn. Now remember, you guys, I told you I want them to kind of come in fairly immediate, and we're looking for this. So if you're new to trading, we're actually looking for this to go up. We just want all the lows to be like that. That's not quite the case here. And they did close beneath that bullish bar. Here's that bullish bar. That threshold on that bullish bar, they kind of closed beneath that. So that's not fun. All right. So out the gate, that's just not fun. I just don't like that. But they did it. They ended up closing beneath it. But they didn't want to break the turn. They didn't want to break the turn. Now, if you just want to be, really particular about it all, if you just want to do that, you can take the red bar here. I'm going to try to open this up in just a second. And you can just project that forward. And again, that threshold is important too. But I like to go with the green bar, the actual bullish bar. Okay. But you can go with that particular threshold. Again, this is them pulling into that threshold. Let me just kind of open this up. That's them pulling into that threshold, and you don't want them to close beneath it. But I like to go with that bullish bar. Really important to go with that bullish bar. You can see that they overshot the bullish bar first, came back up, closed above the bullish bar threshold, kind of held it for a bit. But then they closed beneath the bullish bar's threshold. And then, of course, they held this one here. And then that's when they began to work to the upside. All right. So, but the trend. Now, this is a little interesting because this morning, this is what they did. They set this downtrend. So let's just kind of draw this in here. And then we're going to go into our 15-second and then read some of that real time. So we got 1, 2, 3, 4. That's 5, 6, and there's 7. So they can go the distance of the 7. No prior structure break. All right. So we didn't have any kind of structure break prior to that. All right. None. All right. So now what we got to do, we got to expect to some degree that they can, go down that far. Well, they got halfway. That's not bad. They got halfway. And again, just grinding you, grinding you, grinding you. And then, of course, the turnaround. So here's the turnaround. So we got to get the 7 bars back up. So we got 1, that's 2, that's like a 3. That's this 3 here. And then that's 4, 5, 6, and there's 7. So we got our 7 here. So they're back trending up. Kind of leaned over a little bit, and then they pushed up. And so they're going back through the high. And then they leaned over back to our trend here. This is not a trend down. That's 1, 2, 3, 4, 5. Okay. So they came right back to our trend, and then they went through the high. All right. And then from there, you only had 1, 2, 3, 4, 5, 6, 7. Okay. So you got a trend here. Here's the center of it. However, on the way back up, let's look at what we got. 1, 2, 3, 4, 5, 6, and there's 7. So the center, okay, the center of that trend is important. They made your trend back in this direction. They can go that far. They leaned over and then they went and broke that high, and they managed to do it again. It appears. So we got 1, 2, 3, 4, 5, 6, and that's 7. So they're doing it again. All right. Now, if you want, just take the same distance here and project it back forward, because if they're not going to come back past this trend here, they should keep right on going. It's the same thing. All right. So even here, when they made this 7 down, if they're not going to come back past this trend back down here, guess what, people? They'll just take right back off. All right. So really, really important stuff. And again, you have the price flip here on the 1 minute too. They absorbed it. They just went right through it. That's important. You should have known it was happening because they had one coming into this bottom, but they didn't want to break past the turn. They didn't want to get back past it. Okay, you just absorb that. That's bad. You don't want them running past these signals. I can assure you that's not what you want. Let's see what we had on this one. Let's see if it actually stopped here when it dropped down. Let's get our low here. Low is 28.50. Let's get our low here, 28 and a quarter. So they managed to put that move right under that signal there by one tick onto the turnaround and kind of get right back to it. All right. So, but on the way again, this signal, that PF signal, is just 2 bars. So when they leaned over here, when they leaned over right into the threshold of that signal, okay, take the ride. It's really just that simple. All right. You want to make sure that you understand trading is not complicated. It's just how you want to interact with it. So here's the signal there. There's that threshold. Okay. Now that pro signal comes in immediately. No sooner the bar closed, that pro signal shows up. I want to go ahead and tell you that. That's a professional bar here. So they leaned over into it. Okay. And then, of course, once they made this bar, you had the PF show up, as well as the map. You had the increased volume. All of that showed up. When they leaned into it, bang, there's the push. All right. So really, really simple stuff. Now, they was active. Let me go ahead and push forward here. They were active coming up to this high. All right. So they were active coming up to this high. You can kind of see them again trying to come in here as they're pushing into this high. You can just see the blues starting to come in. Wasn't so much in on the run, except for right here. They got it started. And again, I want to tell you, these pro signals are important. And it's a behavior to it. I'm not going to explain it. Hopefully you can just look in the chart and see it. Just look in the chart and see it. There's a behavior to when this signal shows up. I want to tell you that, like, it's a way of knowing, hey, you guys need to do this if this is going to happen. All right. So I want to go ahead and tell you that. So just take a look at it. Hopefully you can figure it out. Don't want to cover that. But Dimitri, yes, my friend, yes. So 9:30 here. Let's go with our 15-second here. Let's go with our 15-second and kind of pick apart what we just looked at on that 1 minute. Let's go 9:30, right about here. So over here. 9:30 is over here. Oh, there we go. So 9:30 right here on this red bar. 9:30 right here on this red bar, kind of pushed up, leaned over. And then of course there's they absorb that actually, I'm sorry, PF on the bottom there going up. So there's the PF on the bottom again, 2 bars. And it would have gave you a push. Kind of got fussy in here. They absorbed this. They absorbed it, went past it, came with the PF, pushed above it just a tick, I believe, just a tick or so. Let me see. Let me check this high. high 78 and a quarter. Let's get this high here. Seven, actually, no, they came in right, just right beneath it, a couple ticks here, and then gave you that drop. Okay, so that's the PF, and it shot them down to the downside here. And again, if you guys want that signal, all you would have to do is, well, with this one in particular, all you would have to do is have the increase up there with the large trade size, and you would have got that confluence happening there. And then, of course, you would have been to the upside. Now you'll see these tools up above the bars. That's the wicks indicator. So if you have my indicator suite, that'll help you kind of just stay in it. All right. So wherever you're seeing the tools, they shouldn't be coming past that bar particularly, and they should get on their way. And of course, with the map, that's all three of the map indicators. So if you see the map signal in here, that's all three of them: the map expansion, the increase, as well as the large trace size. So if you're seeing the map signal in here, and again, you could be just using the map, and it could fall in the same place, but occasionally I wanted to kind of reduce one of the signals because I didn't want the frequency, and so I just built like a confluence signal. That's all for myself. But you can use all three and get the same effect. It's really simple. So you had the PF come in on this bar here. They kind of leaned into it. You had a two on this one as well. They leaned into it, and then bang, there's that push. PF up here on this high. Again, it just takes two bars to get it to work, and then they push down. You had the PF come in on this bar here. When this bar closed, they gave you some more of it. PF came in here and they absorbed it. And so now you're getting the PF on the PF on the bottom, and they are back at it, taking it back to the upside. Absorb this signal as well, kind of lean back into where they absorbed it. Okay, that's that climax price flip. They lean right back into it, and then they pushed up. Then they came back with it again here. Okay, now they're moving close back up here. Now the A's, there's a little A on this chart. I don't want to have to make everything like super big, but you'll see little A's under the bars. Little A's under the bars. Those are important too. That's the aggression that he was talking about. So you have an A here. Okay, you got an A there. You had an A coming in on this bottom too. Have you know that? Let's see. But that's the aggression signal. What got it started? You had an A down here. Okay, so let's get that A here. Okay, so sometimes the price flip may not be there, but the A will. So let's get that A here. What is that? Low 15. Let's get this low here, low 14. Oh, so they one tick outside of that. You had the PF on the bottom. They did not get that price flip here. They didn't get it. All right, so you had that PF on that bottom. That kind of kick-started everything off. Okay, so we had the PF on the bottom. Here's the two. They leaned right into that PF, and they absorbed before they did it. They went right above that information there. That PF is directly on that bottom. All right, so this is the thing Dimitri was talking about. Leaned into it, and then of course they began to work their way to the upside there. Now let's go with some of this real time. Let's see, can we capture just a few moves of this, and I can explain what you're looking at. Now I'm just going to look at this 15-second chart, and we'll try to read some of this. We'll do our best to read some of it. Let's get some the draw tool. I need the draw tool. Let me do this. Draw tool. We need that. Got to get us a draw tool here. All right. So let's kind of add this. Let's add that so that way I can draw on the chart. I want to draw on the chart a little bit, and let's take a look at this stuff in real time. I don't have a bar percent up here, but don't worry about that. You don't really need it. I can explain to you what's happening with it. It's really simple. All right, so right now, let's see what we have off the high. Let's see what we have off this high. I don't think it's a downtrend, but let's count it anyway. 1, 2, 3. No, that's not lower. So we got 1, 2, 3, and then we got 4, and that's 5. So that's not a downtrend yet. They're still up, so they can go up. All right, it's really just that simple. You have an A here. That's the aggression. So that's the DTT aggression. They pulled down to it. They didn't break the back of it here. Let's see. Low 19, low 19. So they kissed it. All right, so they kissed it. You had the 2 here as well. They didn't get past that as well. So let's see if they can go ahead and get up here. Now this is a different bar color. I'm not going to go into. Don't worry about it. But this is a different bar color here. This is not the no touch, no close bar color, and it's not the trigger bar color. Now the trigger bar color, I will tell you, that's over here on this chart, and I'll open that chart up for you too, because I do want to tell you about that as well. I know that's like really popular online, so I want to tell you about that as well. So they're still up. Now here's that PF. All right, so here's the PF. They shouldn't come back past this bar, and hopefully they won't. They'll just go through the high and just kind of push on. The goal is probably to get them. Now, if it's a break of a new high, I told you guys, it's hard to get these guys to do consecutive closes outside of the bars, okay, much less the highs and the lows. All right. So if they break a high, let's see, can they get two closes? If they won't, they're going to rotate. All right. It's just that simple. Just know that. It's really difficult to get them to do that. We got another two under this bar. So let's see if they can stay at least above here. Let's see. But there's that PF. We got a confluence signal here on this bar. So hopefully we can get a further push to the upside and see, can they get to the five? The target is the five. Let's see, can they get up to the five? Let's see, can they get up to the five, which will be here? Let's see, can they get at least this far? I'm just kind of make this line just a tad bit thicker. Don't want to make trading hard. Now, why the five? I want to tell you this, that the numerical scale is from 0 to 10. I know a lot of people start with 1, but the five is in the middle. So the means is always the five. So they're always trying to get to the five. It's really just that simple. Now, let's see if they come back this way, what we got behind us. If they come back this way, I know it's a break of a new high. There's a PF here. I hope it don't work. I know, Dimitri, again, you like the PF. I think it's, again, something to trade with. I do. That's why I made it. But let's see if they want to come back this way. What we got? What we got behind us? All right. Did they get to the five back here? No, they got close to it. And we got a five back here. They're always trying to get to the fives. All right. So let's see. All right. And they're just taking that numerical scale. That's all. Just taking that numerical scale from 0 to 10. That's all you're doing. I'm not worrying about all them prices on that axis there. I promise you, I'm not. That's in my opinion, it's artificial. Don't worry about it. This is what you need to be concerned with. 0 to 10. All right, and five is in the middle, and they're always trying to get to the means. They're always trying to get back to the middle. That's it. That's it, and then rotate away from it. All right, so we have a two on this bar. They're pulling into it. We had a couple of them print on this side of it as well, but it can't be both. It can't be both. So here come that back and forth. Now remember what I told you guys in the prior video. We're trying to get this to happen. Okay, if we're going down, okay, we want to see this. Well, you get it. All right, we want to see that take place, and the sooner the better. That's important. The sooner the better. Now the bar, the red bar, is this one. And I don't like that they did this, but the threshold is roughly right there. I don't have the let's go and get the bar percent. So that way I don't have to draw it out and you can visually just see it being made. All right, so let's go get the bar percent. It's somewhere in here. All right. Hold on, give me 1 second. I don't want to reveal absolutely everything that's on my bar percent. Those that have it, you should know what they are. That's your range high and your range low. But let's go in, and because there's some other additional information on this, and I just don't want to put it out here online. You have to get the tools in order to know what it is that it'll do. So here's the threshold. So the bar's threshold is right there. Okay, and that tells you how far the bar will pull back before it resumes, and they push right into that area. Those black lines that's on the bar, they push right into that area, and then they pull right back out of it. All right, so now let me do this. Let me do this. I'm gonna make them just a little bit thicker so you can see it. All right, so let's go here. I want you guys to be able to see. It's really simple if you take your time and just, again, digest what's on the channel. That's number one. Digest what's on the channel. You don't need the indicators, but I did want to put in front of you, for those that are in possession of the indicators, I want to give you the suggestions that Dimitri had put here. He suggested that, hey, these are some ones to go with. We talked about the map in the other video. Dimitri had made mention of that. And so I want to put in front of you, this bar has a 2 on it. So I just wanted to grab that threshold. This one has it too, and it has the PF on it. So let's see what they do. If they can't do nothing with that one, let's see what they do with the threshold of this one. Now, when it comes to the chart, this is almost falling at the center of the chart. This is almost at the center of the chart. Now I'll break down that universal approach with you so you'll know. It's in front of the market, all right? It's not behind the market. You don't have to look hindsight. That's not the way you trade professionally, all right? I've been doing this for a very long time. So the center of the chart is here, and then the lower portion of the chart is here. The upper part of the chart, I know I got my zones right there, but you're kind of getting it, I'm pretty certain at this point. The upper part of the chart is here. Okay, so the upper part of the chart is here. I'll just kind of slide all of this back here. And the lower part of the chart is here. Okay, And I told you that they're trying to get to the five. I did tell you that before we even, got started with all that overlap. Now, they didn't do this right. They didn't do this right. All right. So the high was set here. The high was set on this bar. Okay. They gave you this. And again, we don't care about the color. It's not the color of the bar that's important. It's the action itself. And so we have this, then we had this, and then they gave you this one. And then they wanted to come back and give us that. Okay. Still within that high. I don't like that. That's not what I prefer. Okay, the sooner it shows up, the better. That's really important that you get that. The sooner that it shows up, the better. They're almost there. So now the low here. Let's get our low here to our bar that had the two on it. The low here, 2250. We had the low here. That was 2275. So they came within one tick of our signal. Okay, they came in within one tick and they're turning back around. I know they had the aggression here, but they managed to fall just right under that signal. And then, of course, they begin to turn it back around. All right. So as long as they can stay above the upper part of the scale, they should continue on, even more so. Okay. But given the broad now they got this scenario. Okay. Now they got this scenario. Okay. Now, if they're going to do that and actually come back down, we're looking for the red bar, particularly. That's what we will want, is that they pull into the red bar's threshold and stay beneath it. Okay, now I coded my own version of that fair value gap information there, and there's a level associated with that. I put no, actually, this is a different level, but that fair value gap, yes, that zone is there for you, and typically you will want to go with the bar behind it. Okay, the bar behind it should stop it, not the gap itself, in my opinion, because and now this will bring me to my point. Keep watching this, because that's that scenario. That's that scenario. Okay, so there should be some kind of reaction off of that. Now, this is the point that I wanted to talk about. Just really simple. Throw it in front of you real fast. The no touch levels. Let me refresh this real quick. The no touch levels that you're seeing on the bar. This is the universal approach that I'm disclosing online. The no touch scenario, actually, this is my version in it. Let me take my version out and put the version that everybody is chasing online. Matter of fact, I think that is the one. I think that is the one. So that's the trigger bar color. That's the no touch. Yes, that's the version. That's the version. So I got the ICT version in here where everybody's looking for gaps between bars. The only way, the reason why that can show up, and I'm trying to tell you guys this for free. I want to tell it to you for free so you'll know. All you got to do is get the mid of the bar beneath the prior bar. That's it. And the gap should be there. It's just that simple. Now I created a version that's not as simplified. I wanted to put a little bit of information into it that just doesn't require that. But everywhere, if you just learn the no touch, no close setup, if you just learn that, you'll find that everywhere that there's a gap between bars, you'll already be in it within 2 bars and a bar and a half, because you're supposed to do it in real time. You're supposed to get into it in real time. So you'll already be in the trade net positive before that third bar show up with the gap. Okay, so everywhere you're seeing some gap between the bars, I want to go ahead and tell you, wherever you're seeing a gap between the bars, oftentimes you'll see the level before the gap. And what's making for the bar color, if you're looking at that, is this pressure that's in the middle that's trying to read it to you before the bar even closes. All right, so I got indicators that try to get you in it a lot sooner so you can go ahead and be a part of that action. All right, so but that 15-second, let's see if they can get here, and then I will absolutely let you go. They got close. They just didn't make it all the way there. They didn't make it all the way there. Let's see if they'll make it here. Let's just see. All right. So let's see if they'll get here. We got the aggression here. So now here's the move to the down. We don't want them past here, but I'll just put this here. Should they want to pull up, they may do that. But we don't. We really just don't want them past it. Let me put it here because I don't want them up there. That wouldn't make sense in my opinion. But that's where the stop would need to be. That's all. That's where the stop would need to be. We have a 2 here. They shouldn't get past this bar. So now let's kind of do this. Kind of put that in there. And let's see, can they get to the 5? They almost made it to the 1 to the upside. Again, it's all about reading it in real time. Can you read it in real time and make it simple? Let's get our center of our chart and just kind of throw that like midway in there again. The chart scale move I provide, and that's the other thing, I provide you guys the upper part of the chart is roughly right about here. The center of the chart is right about there. The lower portion of the chart, give or take, is right about here. I would provide you guys the, right about there. I provide you guys the templates that actually divide up your chart. So it divides your chart scale up for you. Okay. So that way you can kind of just go in and trade and you don't have to keep track of it, even though the scale, it adjusts and it, calculates as price begin to trade, on extremes. The chart scale would move, but the chart scale that I provide is a ping image. So you'll load it onto your chart scale and it'll reflect okay where the center or the upper part or the lower part of the chart, as well as some additional information because there's a private chart scale that I provide when you get the suite that's not available to the public. All right, so there's some other additional information on that template that will kind of narrow down your entry even more so. So it'll point to where the signal should be. Okay, so if there's going to be a signal to guide you uh, with the activity, if there's going to be a signal there, the chart scale should help you know where that signal should be at and which one you should trust to get you there. That's all. So we have the A here. They kind of pushed away from it. They got back above here. Okay, so they came down here. Now again, for those that that again they there's a private community I had started that I tried to teach them about what happens when they jump the line the moving average, what to look for when that happens. And so let's see if they'll rotate back up here and hit this one, being that they got close to this one and they didn't want to do nothing with it. There's that threshold here, but you guys can go at that information when I made that private community I told you about. They closed beneath this. I don't trust this one here. I don't, but they possibly actually may want to go and touch this. They actually may want to do it. They made a trend down, but you guys, when they crossed the average, there was something I told you that they'll do. And should they do that, then yeah, they might can continue on. But at this point, they may be wanting to go ahead and trend back up. They may want to go ahead and trend back up to the upside to hit that target. I don't like what's down here at all. I really don't. I really don't. And definitely because they close beneath this threshold. That's not fun. That's not fun. But again, it's all about, and again, I just put two levels here for you. There's two levels here for you. I'm just disappointed the PF hasn't showed up. I'm really disappointed in the fact that it hasn't showed up. We had the aggression here. The fair value gap I put in here is actually the one I created. All right, so it's a little bit different. This is not the standard one that I just showed you on that 1 minute chart. I purposely put that over there so you guys will see. There's a slight difference. Let me see. Here's a slight, yeah, see, this is the one I made. All right, so, and actually those are the levels. Okay, so we got the zones and the levels. I put mines in here. So this is the one that I have in here. I just try to put a couple things here, but you'll want to go with the level. Try to have your stop behind that gap, in my opinion. Now, this is my opinion. You can trade his approach however you want. I'm just telling you the no touch, no close method shows up before that information. So you'll want to kind of again go with that. We had that information over here. Again, this is my version. All right, this is my version of that information. They never broke that level there, and then they turned around and they pushed up. So that's my time with you. I want to kind of hold the video just to see which one do they plan on getting to. I mean, I see that they got really close to one side and of course close to this side. I don't like this bottom. I suspect that they would want to get through it. I'm gonna be honest. I suspect they'll want to get through it, but them pulling up here, they're pretty much back at. If you're not gonna, do anything with this, you may want to go ahead and continue back to the upside here. But if not, let's count our bars. Let's just do this really quickly here. I'm gonna try to stay up here until they hit one side or the other. We got one. We got two. We only have three, so that's not quite it. And so if they're not going to come back through here, let's see if it'll just go ahead and continue up. But yes, you do have seven here, so that's one, two, three, four, five, six, and that's seven. So it's suggested that they can do the trend down when they make the seven. However, they don't have to. I want to go ahead and tell you that they could stop and say, hey, we're not going to break what we've already done. Let's just turn it back around. And I told you guys also in the private community how to catch the trend before it becomes the trend. Please make sure that you regard what it is that I told you about how to catch the trend before it becomes the trend. There's something that takes place. And I told you guys the most important way to go about it. I told you what you need to look for in order to know where your mid of your trend should fall. So before it gets to 7 bars, you guys that bought the suite, when I offered the private community, I gave you guys some tips. Please make sure that you're regarding what should show up near the center of the trend if it's actually going to become a trend. There's things that I'm trying to reveal to you guys here on YouTube as well. That wasn't able to be a part of that private community when I had it. I'm trying to give you guys tips on how to look at chop. Okay, now if you're not going to chop, you're going to trend. It's really simple. So even if you didn't get a chance to be a part of that private community, I want to let you know when it comes to trading markets. That's why I outlined this here. Okay, when it comes to trading markets, there's things that you would have to look for. Okay, to know that the market will trend. So we had our three here, okay, and we drew our zone. All right, we had our three and we drew our zone, and preferably we want the bar to be red. That's the one we really want, and we want it to come in fairly immediate. Okay, we want it to show up kind of fast. And when it does that, this is what we're looking for. So I'm trying to give you guys just some tips here on just the channel here to look for how to gauge reversals. I'm not going to exclusively teach reversals because I'm trying to teach you guys how to go with the market. Go with the market when it's suggesting that it's ready to go. Please go with it. If you can get the mid of the bar, I don't have the mid cut on here, but the mid is roughly in between those lines there. So we got the mid of the bar above this high. The pressure comes on. I got the range pressure in here as well. There's another indicator I have up here on the other side. Now we're getting the PF. Oh my goodness! I wish this would have came in soon. I know we had one come in here and had that one come in here. This one, the one that actually held. This one didn't do it. They kind of went under and then they popped up. I don't know what they plan on doing with this one. Let's see if they can hold this one. Let's see. Now, if they're going to do that, let's project this forward. Okay, so we get our signal within 2 bars. Let's project that forward. Now, let's see if they can go ahead and reach up here. I was hoping to get far more of the PFs to show up in this video for you, Dimitri. I really was, because I know you had mentioned that indicator, and I just want to make sure that I touch on some of the things that you're using that makes for why trading makes sense to you, and so you'll have a visual reference as to what the indicators are doing, not just on your chart, but also just in light of when you come to the channel, you'll be able to see them in action. All right, so let's see if they can just continue on from the signal. Let's see. I know we had a two back here. We had a two back here. If you watch the information long enough, hopefully you will be able to figure out what it is that I'm trying to accomplish here. All right. Again, I want to provide you guys in the YouTube space and the trading community at large. I want to provide you guys with some robust information that can absolutely show up on any chart. That makes trading simple for you. That's the main thing, to make it simple. Even if you don't have, my indicators, you can still go to your chart, your platform, and say, hey, because of some of the things he's told me, this should help me, get my trading to work. It should be simple. It shouldn't be complicated. All right. Really simple stuff. And again, I code indicators based on additional information. So it's not just, okay, let's see if they'll close beneath this. I know we got a two here. Yeah, they're going to do that. Yeah, I kind of figured that might happen. I'm be honest. There's a break of a new high. So they made this high and they broke it. Okay. Now they came down and they slammed that signal. They slammed it and they slammed this one. They slammed both of them at that particular moment. And again, because now we got an A here, I do want to have you know that there's an A under this bar. That bar here has an A on it. They kind of closed beneath that threshold, but the A is still holding up. They haven't broken. Now we have that again, that fair value gap. I took it coded this, and they just fell into it. But let's see, we got a two coming in here. They can't do this all day long. Okay, they can't. So here's a two. Let's go on it from this side and let's see if they want to get back down. This is a trend down. It is. This is making another trend back up, but it can't be both. I want to say that to you. It can't be both. So if we were doing the center of the trend down, it would fall roughly right about here. Let me kind of just put some context to this because I don't like the overlap. I don't like when they do that. I don't like when they do that. So let me just kind of throw this in there too. Let's see. Let's put this right here. It's really simple, you guys. Really simple to trade. Let's see. And so we got, I know we got 7 up. One, I don't like what's down here. I don't. But 1, 2, 3, 4, 5, 6. There's 7. That's 7 there. So we got the center of the trend here for the up. Can't be both. Let's see which one they plan to do. Just hold the video just a little bit longer. Hope you guys don't mind. Hope you're enjoying being able to watch it. because I'm trying to make sure that you're able to see all of it. I do think they may want to get below this. They may. We'll see. We'll see. They're back at the center. Now, if we're doing the center of the chart scale, let's make sure that we look at that too. Let's do the center of our chart scale. Let me just try to color these. So this is the upper part of the chart. We're going to use this for our upper part, lower part of the chart. All these blue boxes are starting to throw me off. So it's the upper part of the chart. Let's gotta throw this, like, let's say the upper part of the chart is roughly here, center of the chart. They're roughly at the center of the chart. That would be right about here, give or take. Let's kind of make this black or something. Let's make this darker so we can differentiate which one is which. Okay, I'm about to put the color in there. Let's go black here. Let's go black. This will be the center of the chart. I don't have the chart scale up here, and I don't feel like going to get it. All right, so here, this will be the center of the chart currently, where they're trading at. So where they're trading at is the center of the chart. The upper part of the chart is here. They kind of pushed into it and then fell off of it. Now, the lower part of the scale would be down here, and that's beneath our center of our trend. We don't want them back here. So let's see if they'll go ahead and go. Let's see if they'll go ahead and go this time. All right. Now, these are just a couple of the indicators that I'm putting in front of you. I have it's over 50 of them. So the bar color alone is an indication too. I have that when it colors it, it's supposed to get it to go. So I have that the bar color is important too. Got a lot of indicators, people. A lot of indicators because they're just indications. That's all it is. It's not something that guarantees you anything. It's just an indication. So yes, so they finally made it. Great, outstanding. So price got trapped in between the two. I do hope that you've enjoyed. Now we got the A. And we got the A when this green bar finished. You can pause the video and go back. I know the risks don't make sense to you, and 2 bars, you may not like that, but it pushed again. And oftentimes, I want to tell you this about the signals. Oftentimes, try to go with the distance of the signal. Try to anyway. Try to go for the distance of the signal if you don't mind. It would help. It would help. But if you can, treat every bar, effectively as a trend. So try to get 1 bar to give you 1 bar's distance. You may have to, arrange your targets differently. You may don't want to you may not want to stay in the market too long because, and again, this just all depends on your target. And I said this when I talked about the chop video. I told you guys the market is always trending. I want to say this to you: it's always trending. Every bar is a trend. Okay, every bar is a trend. So it may be that your entry or your target is outside the scope of the trend distance, how far it want to travel before it rotates. So want to make sure I say that to you. They made it to our 5. That's what they're doing. There's the 5. They came close to this one here. Remember, that's important. 0 to 10. That's the numerical scale. Okay. The means is the 5. They would like to get to the 5. It's really important that you understand that. I'm trying to promote to you something that's really simple and that can be traded. It's really simple. Want to make sure that when you trade, I know a lot of you have joined me since making a few of these videos. To the new people, this is what I've been doing for at least the past year. Only been here a year, and gaining traction just a bit. I don't plan on being up here long. This is a library. I may not make another video after the day. I'm gonna be honest with you. Just want to give you some information to go with, so you can get your trading to work. I've already been in this space and I took it all offline. I want to say that to you. I took my company offline, took my YouTube, social network, all them different Twitters and all that. I even had Twitter and stuff for this channel here. I just deleted it because I'm not here for that. I'm here to just help a few people that want some help. All right, just some people that want some help. Just some of them. And some of you have actually again expressed to me that it has impacted your trading, which is a good thing. That's what I want. I wanted fate to get the help to those that really need it. That's important. And I'm trying to do it in a way that has never been done. I'm not plastering my face all over these videos while you're trying to learn. You're trying to learn. That's important. That's important. I'm not going to sensationalize it. I'm not going to make it entertaining. This is not entertaining. This stuff would tear your life up. Have you upside down, losing all kinds of money, your emotional stability, your mental, faculties. This stuff will mess your life up if you don't know how to do it. So I hope that I'm reaching some of you. I hope I'm reaching some of you. and I hope that this information finds you well. Please enjoy your weekend. Take your time. Don't try to rush trading. Please take your time, people. Please take your time. I want to say this before I go, and I won't bore you anymore. This down here, this bottom, this is what they're trying to protect, your timing. They don't want you to nail this. If you get your timing right, you can do what you want. So they'll do all that they can to protect what's at this bottom of this chart. Everybody is so concerned with what's happening over here on this right side of this axis. This is the thing to be concerned about. This right here. And I'm trying to do my best to give you some information that would help you navigate that information there. All right. So that's my time with you. And again, I wish you all the best. And again, thank you so much for coming by the channel if you're new. And again, if you want, only if you want to, it's totally up to you. If you want some additional information on your chart, if you want some additional information on your chart, I got loads of information that can help you. Okay. I just wanted to highlight what Dimitri was talking about. And again, thank you so much, Dimitri, for being kind enough to share your your experience with the tools. It means a lot that you have done that. Climax price action flip. Okay. Well, the climax price flip. Okay. And the aggression. I know I had a couple more indicators on the chart, but the PF, PF. I want to say that to you. That's important. Yeah, that's important. That PF, that blue PF is important. It's here. You get some winners, and yes, you get some losers. You can't get rid of the losers, people. You can't get rid of them. They're there. You had a PF up here. You can't get rid of them. 34. Let's see what we had here. And they made a tick right outside of that high. 33 and 50. No, they came in really close. So a couple ticks, bang, it went down. You can't get rid of the losers. That's a part of trading. You just have to trade responsibly. Make sure you don't put too much risk out the window. Have an idea where it is that they belong, and then take your trade. All right. So I wish you all the best with your trading. Again, thank you so much, Dimitri, Jimmy. You guys are very supportive. Thank you so much for commenting, leaving your comments. And again, thank you so much for stopping by the channel. If you're new, I appreciate you taking the time to consider this information. If you would like this week, it's there for you, people. I do use PayPal. I want to say that to you. I use PayPal to send. You can, select whatever payment form you want to use to get the suite. You can select whatever payment form you want to use. So you don't have to have a PayPal account, but that's the company I've been using for years because I get my business through that. And so if you want to, of course, go in this direction to get some additional information, totally up to you. That's who I use. So if you want to proceed in that direction, all you would have to do is use the contact information here. Just go ahead and email me. Let me know you're interested. And from there, I will have you with all the information, the templates, the workspace, the indicators. Almost there's the PF. Now the PF comes in when I'm about. This is insane. It wants to come in while I'm about to go. All right. Well, but yeah, if you guys want the indicators, you're more than welcome to it. Again, my name is David, and I wish you all the best with your trading. Take care.